Is it possible that in trying to create the biggest bubble in the history of the world, the Fed will destroy its own currency? While some believe that this might be inevitable, others have suggested it's not possible. Looking carefully not at their words, but at their actions, could it perhaps indicate that this is all intentional? I'll leave that up to you. You came here for the truth, so let me unveil that for you. Today we're going to look at what the Federal Reserve has done. I wanted to begin with that and talk about, of course, the central bank activity creating a mess. They're creating bubbles. This is an article that I want to show you. It really highlights a lot of information and how the two are connected. And then after that, I'll give you some other information. So let's begin. Peak Prosperity had this article, Will the Fed Destroy the Dollar? And I thought it was interesting. There's, of course, a video along with it if you want to watch it, but we'll just show you the chart, give you this information quickly. It'll lead into my next point. With the Fed now in extreme easing mode, having printed nearly $3 trillion in thin air money just this year alone, it's not a stretch to expect the value of the dollar to decline even more precipitously from here than current estimates indicate. So in a world where the Fed is considered to be by many to be the market, backstopping investors and stepping in at a moment's notice to prevent losses, what is the Fed most likely to do from here? And so many people have asked this question and wonder, what is going to happen to the actual value of the dollar? Now, if you look on a more short-term basis, you can see that the value of the dollar has gone down somewhat, but you zoom out and you start to see it's up, it's down, it's up, it's down. Ultimately, it's the reserve currency of the world. It is considered to be very strong in general. People are using it in trade still. They use dual currencies, one being their own and one the US dollar. It is in favor no matter where you look at it. However, its strength is certainly waning, at least the trends that we have today, at least based on that information. Well, looking at this, they talk about the interview that was done, and here in the video, they reveal that they shared the same sad conclusion that the Fed doesn't really have a plan to get out of this mess it's in, a mess of its own creation, and is pretty much playing for time, trying to delay the inevitable, painful repercussions of its failed policy. Now, I'm going to give you my opinion, which I normally do, but I want you to know this because I read you this information, I read you all these charts, and I'm simply bringing it to you. You do what you want with it. What I want to highlight here is what I touched on in the introduction. Is it possible that all of this is intentional? You intentionally create a crisis to then provide a solution. You do what you want with that info. I don't have any details. I don't have a chart on that. I can't give you any statistic or historical context that would enlighten that information further. So I'm just talking about it. You let me know what you think. Take a look at this, the rise and fall of the dollar from 1913 to 2019. You could see, of course, 1913, the Federal Reserve created. You could look at what they had done throughout this period. You see the destruction of the currency. This is your money. This is your savings. This is your hard-earned dollars, Federal Reserve notes, more likely. And you see that over time, the value is less and less and less. And throughout this period, we are supposed to be having this absolutely fantastic rise. But it is truly unfortunate to see that it doesn't look like that's the case. It really looks like a devaluation of the currency. And you can measure it in however you want. You can measure it in US dollar. You can measure it against other goods, food, energy, anything, a barrel of oil. And you just keep doing that. And you start to see that things look really different when we start measuring that through different means. And Mike Maloney's book was good at that. And I believe it was Richard Duncan's book, which might be called The Dollar Crisis, if I remember correctly. But, great books that talk about that a lot and give you a much better understanding if you want to follow up with that. I want to try to move through this article out of the Wall Street Journal, give you some good info. There's a lot in here. Double stock market bubble brings toil and perhaps trouble. Investment choices previously viewed as overpriced showed big gains in 2020. Can they prove doubters wrong again? So if you go through this, I'll see what I can do. But essentially what he says is that there was the speculation taking place 2017, other times as well. And it was an obvious bubble. You looked at it, totally a bubble. It may have gone down. Some of them went back up. But in 2020, it was the double bubble. It reflated again. And that happens. He cites the examples, different examples where that was actually the case. Something was overvalued. Something got taken down. And then 2020 reflated it because of all the cheap money and so on. This right here, they're just giving you a comparison between the S&P 500, which is the gray line, and then you see the blue, which is Tesla. And obviously, you know what's going on with Tesla. I mean, it's crazy. But the naysayers right now are losing out at this time. Everybody's trying to short it is losing their shirt. It's easy to spot bubbles, too easy. They seem to be almost everywhere, almost all the time. Worse still, for those of us who try to spot the excess, much of the stuff that was labeled frothy in recent years went on to make big money in 2020 for those who bought into it anyway. The question for investors, were the bubble calls just wrong, or are we in for a new era of wild speculation driven by cheap money that must inevitably come to an end? I lean toward the latter, but the stunning performance of so many bubble stocks this past year shows that even if this turns out to be right eventually, there's plenty of scope to be horribly wrong in the meantime. So that's what people are doing today. They're trying to short. They're saying this is overvalued. You look at this stat, you look at this indicator, you just keep looking. It's all there. It is really truly overvalued based on so many different metrics, based on a historical context, based on what we can see that's going on in the actual economy. I mean, it's devastating, and yet the market keeps rising, and we've gone from the handful of stocks to now pulling everything up with it, with the cheap money. Now, there's more info here talking about how we saw in a period of time, 2017, they created this portfolio, and the only thing at this point right now today that isn't up higher than when that came out in 2017 is the Argentinian 100-year bond, the century bond. It's down since being selected, having lost almost all of its value. I covered that here on the channel. If you had put $900 equally across the portfolio's 9 holdings at the end of June 2017, you would now have more than almost, let's say, $3,000. That's more than double what you would have got from just the S&P 500. So yet the bubble watchers were right on many of the stocks, not for long. And essentially going through talking about things that had popped at the time, coming back up, whether it's Tesla stock, Netflix, and so on. What about this here? This is an example of something that did actually perform quite poorly since its peak, and that is the 3D printing thing. That was so hot for a period, and you see that chart, yes, showing here 20% rise, outpacing the S&P 500 in 2020, but that would have meant that you had to buy at the absolute bottom. And see, comparing it to today, what about the rare earths? That was something else. The whole solar thing was such all in the rage, 2008, along with commodities. And you know what has happened over the last few years. Now, again, 2020, it has come up significantly, but that's a whole different story, right? We can't just look at one thing and we have to say, well, from the absolute bottom, the stock has gone up this much. No, that's not realistic. If somebody was holding in over the past year and they've been adding, maybe they've been adding every month, or maybe they've been adding throughout this period. You got to understand where you bought in and then where you sold. If you haven't sold, really, you haven't realized those gains. Different story altogether. As usual, the bubble stocks have a good story to tell about new technology and major shifts in consumption. They are helped by the super low bond yields engineered by central banks, but their valuations and the scale of the price moves are extreme and probably unsustainable. Probably. The danger for those of us calling out the frothy markets isn't only that high prices could be justified by fast growing profits, but that bubbles can always become more extreme. If you doubt that, just look at 2020. Definitely some wise words here. He's got a lot of good to say. Let me know in the comments what you think. More than 20 years of airline passenger traffic growth was erased in 2020. I've never seen it written that way. Quite interesting. Looking at this, in comparison to last year, passenger traffic is estimated to be down 67% in 2020. More than 40 airlines completely ceased or suspended operations, and more are expected to fail in 2021. Of course, this is going to continue on at least for a period, and even if the amount of people start taking flights, it's still not enough, because you look at how many, when everything was quote unquote normal, how many of these companies were redlining. They weren't able to make ends meet. It looks a lot like what we're seeing with people, where when they were actually fully employed, they weren't able to make ends meet. And then you reduce your hours, you reduce your salary, you lose money for a period of time, you lose that revenue coming in for a period of time. It hurts, and hurts long term. Movie theater owners are frustrated about streaming, but their survival depends on studios. It's an interesting dilemma that we see with the movie industry. It employs a lot of people, and yet it's been shut down essentially at this point, both from the side of the actual making of the movies, the TV shows, and so on, but also when we look at the movie theaters, when we see, how many different industries are connected in with that. As I've talked about many times, you've got the catering and the technicians and everybody that doesn't necessarily work in the movie industry, but somehow is supported or supporting it. There's a lot that's involved in this. There's no doubt about it. And this is just talking about that. I don't want to harp on about this subject. I do cover it often because it's one that was hit especially hard. Singapore's economy is in the worst ever recession, looking at the contraction of 5.8% year over year in 2020. That's better than the official forecast for an annual contraction between 6 and 6.5%. Look, we know what's going on here. All around the world, there's a contraction, but Singapore generally was always seen as a country with good growth. They have a good currency overall. They are, there's a lot of prospects there. A lot of wealth is there. Real estate, business, everything was always seen on the up and up. But even the strongest can be taken down when you have a situation like this. It doesn't matter if it's specifically this situation from 2020, but of course, you start to see how there could be disruptions anywhere, and it could affect a country even like Singapore. U.S. home buyers face the worst affordability squeeze in 12 years. It's crazy to see what has happened with the prices of homes. People are already dealing with so much, and now you have home prices that are increasing. Many of them can't move from where they are. They need to get out, but the prices have risen dramatically. Maybe the place that they live, prices have gone down. So this is a real big issue for a lot of people. Record low mortgage rates were supposed to make it easier for home buyers. Instead, they've helped push affordability to a 12-year low. Buyers in the fourth quarter needed to spend almost 30% of the average wage to be able to afford a typical house, the biggest share for any 3-month period since 2008. Look, 30%, you look at some of the major cities, it is double, and in some of them, triple that number. So this just gives us an average. As far as I'm concerned, it doesn't really give us a good picture of what's happening. But regardless, the point is that is increasing. All we see are bubbles left, right, and center, and we have to look no further than the central banks. And that's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that by clicking a button on your screen. You are one of the 9% who do so. So I want to thank you very much. If you want to learn about e-commerce, if you want to understand how to sell stuff online the right way, I'm talking about the right way for free, check out the AmazonGPS.com. If you want to know what the financial system is all about from top to bottom, you want those explained that basically anybody, whether you know about the stuff already or you don't, this is what you need to know. These two books have everything. Check it out at the link in the description. If you haven't seen this video yet, you definitely want to check it out. Just click this and I'll see you there.